It's a good day if you're in banking, but not so much if you are in the tech sector. We're going to be discussing the latest earnings, everything going on in tech and crypto, plus much more today on Money Never Sleeps. Welcome back, everybody. Happy to have you with us as we close out another week in the markets. Before we get going, hit that like button down below. Subscribe to the channel if you have not yet. Appreciate everyone who has. Nothing that we say is financial advice. Please do your own research before making any buys or sells. Kev, we had some data come out this morning, some earnings from the largest financial institutions out there. Beat expectations, no surprise there, as they're the ones who set the expectations and they want to make sure that the market responds favorably. But if you look a little bit deeper, it's not quite as rosy as the banks and the larger media outlets want you to believe it is.
Yeah, absolutely. Banks beat their own earnings, and then the media beats them off. It just seems like the cycle of how financial data is distributed to the public. It's not necessarily something that I would be celebrating too much. And again, even if the banks that are doing, beat earnings this week, well, next week's all the smaller ones that probably could move the market a little bit and cause a lot more of that contagion, that panic and fear. But I definitely think that there are some red flags amid some of these earnings reports that we got today.
Yeah, everything comes with an asterisk in the state of the current market. So, we had the big banks reporting. We're seeing, that continued turmoil in the Middle East leading to a lot of volatility in energy. Gas is back up. We see gold, which we discussed yesterday. It was down yesterday, back up in a big way today. The dollar is having a strong day. It is back into the mid 106s. Volatility index, the VIX is, back up into the 19s. So, shouldn't be surprising that number is moving with all the volatility happening in energy, in banking, in tech. A lot of the big tech names are down 2 to 3% on the day. Tesla having a rough day. Nvidia down almost 3%.
Netflix.
Coinbase with the crypto volatility. Netflix down 1.5% at 355. I mean, that one is
That's
it,
an
it
amazing one.
it's still overbought on the monthly. Like there's still plenty of downside opportunity there. So where do you want to start today? We didn't get really anything as far as economic data goes. If we look at rate probabilities, those are little change from yesterday. Still 89% chance of of a skip November 1st, and we'll get one more PCE reading before that rate decision, I believe. But it looks like that's locked in unless anything else crazy happens in the next 2.5 weeks. So, what has gotten your eye today in the markets?
Yeah, let me just share my screen. We'll just go into the banks because I think that's probably the most interesting news that we got today. And everything happened pre-market, and we saw that some of these were up beforehand, but a few of them ones that weren't up were PNC and I believe BlackRock. They both had a bit of a push down in price, but we can see that PNC's profit beats forecast despite fall in net interest income. And again, I think a lot of the things that we've seen with these banks is that net interest income was all up, and that's again that's due to the fact that the Fed's rates are extremely high. People who are paying their loans off, especially those with variable rates and stuff like that, that's just going to generate more income for these banks in the short term. Again, what happens when interest rates go to zero if something breaks? Well, then that's probably going to be a double fisted. It's not going to be good. I don't know what I'm saying half the time. I have to. I'm either going to have an aneurysm or I'm going to say something smart, but it's usually the aneurysm part. But yeah, I think that's if the Fed does cut rates, we're going to be at a place where the market and these banks are not going to be having these extreme, I guess, profit beats, these earnings beats that they're claiming to have. I think that PNC is one that's still in a pretty critical area, and we could just let me just share my screen. We can look at their earnings report real quick. We can see quarter over quarter and year over year. It's a bit different than what some of these headlines are saying. Let's see. I think this is PNC. Yeah, this is PNC. You see PNC's financial results. Revenue from third quarter of 2023, that's this year, is at 5.233, and this is in billions. It's in millions, but I'm just going to say in billions. That way we know what we're talking about. And then we can see that over second quarter of 2023, it was at 5.293. So it's down from quarter two. But then from a year ago, we're down from we're at 5.549 in third quarter of 2022. We're at 5.233 this quarter. So we're definitely seeing that profits and revenue over the year has definitely declined, right? We're seeing it slightly decline from quarter two of this year, but we're seeing that a lot of this is different from where we were. And I think that the market is extremely excited right now. But it's weird because the charts are saying the exact opposite, right? So even though they're happy that they beat earnings, it's nowhere near as where they were last year. And last year at this time, the charts were pretty bad for a lot of these financial institutions. So when I see this, that's not a good thing to be seeing. We can go back down here. We can see that across the board, everything in quarter three is pretty much down. We can see average loans in billions, 3.19.5. So 319.5 in billions for average loans. That's down from 324.5 in billions. So you can definitely see that, the interest rates are definitely affecting that. It's up from last year. So that's really interesting to see. But we could also see average deposits have decreased quarter over quarter, and year over year deposits have continued to decrease. That's not a good sign for these banks, especially if we do get some really bad news amid, I don't know, say one of these smaller institutions, say they're insolvent or something happens where there is a bank run. Well, then we're just going to continue to see deposit flight out of the system. And we've showed this on the show back when you were on vacation, where there's a lot of money leaving the system at banks. And that's also a bad thing, because if they're not creating these loans, there's no new debt that can be created. There's no new money that can be added to the supply. So this is not necessarily a great report. Again, these news outlets aren't going to report a lot of the stuff that's deep down on this earnings call. But I definitely see this across the board with a lot of these banks. PNC is just the one that I'm also short on. So I just wanted to bring that one up.
Yeah. When it comes to delinquencies on debt, was there much that you saw in the reports or any of the stories there? I mean, that's something that we've had our eye on for quite a while, whether it's credit card debt, auto loans, mortgages, commercial real estate, more and more people not being able to pay their debts and continue to accrue more with these higher interest rates. What did that look like?
Yeah, so for the most part, we did see that delinquencies are up, mainly in the commercial real estate and credit card sectors of their balance sheets. It's the exact numbers, it's mixed across several. I've seen something like $76.5 million worth of delinquencies when it came to credit cards. I don't remember exactly what financial institution had that. I think it might have been Citigroup, or it was either Citigroup or Wells Fargo. One of them had a pretty bad outlook when it came to credit cards. They're saying that the delinquencies aren't necessarily as bad as it's been in other financial times. Obviously, they're referencing 2008. I don't know. It just seems like that's still bad news, right? The fact that there is that much.
Just wait, it's going to keep getting worse. Like these rates are high. People aren't paying off their bills. They're going to continue to accrue more and more debt at rates in the 20 to 25% range. Like just you wait.
Yeah, I mean, I think they're spinning it a lot better than it probably is. And then we saw that the markets kind of reacted positively beforehand. The markets right now for a lot of these have pulled back a bit. It's kind of trading half and half in the Dow right now compared to the other major indexes. But the banks are something that we still should be concerned with. I think that for the time being, just if the banks are up, because I mean, let me just pull up a few of these real quick, because I don't necessarily think that's half of these pass the smell test. But let's look at Citigroup, right? This is just one that we have to keep an eye. You can see on the daily that we're completely overbought, right? We're completely overbought, but we also have this key level, this blue line right here, that is the extreme level of support. We bounced off it a few days ago. What's to stop us from going back down there? We see that we got rejected here today on the daily. We went all the way up here, but then we got rejected by this time right now. Hopefully by the close, we're probably going to still be in the red. But there's nothing stopping us from starting to test below this range here. And if again we look at this on the weekly, we could see that it's pretty we break that, we're going to be going down pretty significantly. And this goes the same for PNC. PNC said that they're going to lay off 4% of their workforce in the banking sector. just to save, I think it was 300 and something $1 million. We know that Citigroup's doing the same thing going into 2024. Q4 is when they're going to start this year. They're going to start kind of coming up with the idea of how many people they're going to lay off within Citigroup itself. I mean, these aren't good things to be getting excited about. And again, if they're trying to cut costs and corporate profits are still down, then obviously, I mean, this is just for banking, but across all sectors, once you start getting a lot of these earnings back, if earnings are down and they're starting to lay people off, well, then now there's less people to buy into the product, and that's just going to slow down the economy. It's going to bring it down even further. There's just a lot of things that are building up here, and I think the banks are one thing that we have to keep an eye on because this is where a lot of people store their wealth. And if this is the place where you're starting to see deposits and people fleeing, well, then you can imagine that it's going to be happening across all sectors just the same.
All right. So I think that is a good amount of coverage on the banks. This is just the beginning of earnings season. There'll be plenty more to look at next week. That is going to take center stage. Like I said, not a ton on the data front, but we should have, tech earnings beginning next week. I'll pull up the earnings calendar right now, but we get Tesla on the 18th. We're going to get who else? More financial with Bank of America. We'll have some, we'll get Netflix earnings the same day as Tesla. So next Wednesday is going to be a big one in the earnings trees, especially for tech. I look forward to that quite a bit. Those are the big, we'll see more stuff. Like I said, the financials and tech are next week's. And then I think we'll start to get Amazon, Apple. It's always like the same order, right? They have it spread out, but we usually get like Amazon and Apple right around the same time. That is going to be obviously important ones to look at there. On the crypto front, we're seeing a pretty flat day overall, not a whole lot of movement. BTC and Ether are just kind of trading flat. Total market cap is trading pretty flat there. Anything of interest in crypto that we can discuss?
Yeah, let's take a look at some of the liquidations because that might give us a good idea going into the weekend, the weekly close, where Bitcoin's price, maybe some of these alts might be going. So let me just pull that up on CoinGlass. We're going to look at the 7-day just so we can get a good look at where a lot of the liquidity sits. So we can see that right now we're at this red line, which is at 26,748. There's a lot of liquidity north of us here. It's all the way to looks like right again, same range around 28.5 is kind of the cutoff where anything above this doesn't really make sense to be liquidating people. If you can still generate a lot of shorts building up by the price being pushed up, and then you can liquidate them on the way down as well. I mean longs, and then liquidate shorts on the way down once people start shorting up here. But it looks like we're kind of in this range of, okay, which direction is it likely to go into? Well, we're a lot closer to the some of these long liquidations that we could absolutely hit, right? So we could see price go down, liquidate a lot of longs, people start building up shorts, then we get a lot of shorts in this range here where the price starts to go into. So I'm honestly thinking that it makes a lot of sense that Bitcoin could just continue staying in this range before we get a pretty good break. But I do think that we are going to test some of those higher levels on the chart. Let me pull up Bitcoin's chart right now, where we could see, some of these liquidations happen up to the top of the parallel channel. And then once we get to the parallel channel, maybe we get rejected a bit there, and then we start to liquidate people on the downside. But again, we still are in this really weird pattern where we're in a wave 4. Technically, we can see that the wave on the way down, we are finding some resistance here on the 250 moving average on the daily. We are getting close to oversold on the daily, so it's very possible we do get that little pump up here, get rejected around, I don't know, 27.7 to maybe 28, 27 to 20, 27.7 to 28 flat. It's very possible you just liquidate people in that range before we start to move down. But again, I think that as we've broken this channel, there's a good chance that we're going to stay out of this channel. And if we look at the weekly, we can see that, this came out of the oversold. So, I mean, there's room for it to go down once again. Continued closes below the 50 moving average are going to be really important because that means that we're probably going to have to go test the 200 at some point. So with Bitcoin, it's very boring. Yep. So we just have to keep an eye on how this closes, how price reacts. But I think the most important thing for Bitcoin for the time being is just going to be Bitcoin dominance. I'm seeing a lot of people that are continuing to stay extremely bearish on Bitcoin dominance. I'm not going to be one of those people. I can see that it's coming down on the daily. You can see that it's it's going to be pretty oversold in the next 2 to 3 days. And if it remains, above 50, say 50.74%, there's a good chance that we can just get another leg to the upside, right? This could be a 5-way move in some way. 1, 2, 3, 4, 5 could take us to a double top at 52.21, or we can, push further up. I think if we get to 52%, we start closing above 52%. There's nothing stopping us from going to higher levels like 57.12. We could even get to 60%. It really depends on how a lot of the price action is in Bitcoin and how liquidity stands. If people are pulling money out of the system, Bitcoin's dominance is just going to go up regardless, right? If it's parked in Tether like it currently is, 8.14% dominance against Bitcoin, then it's going to probably bleed back into Bitcoin if people get excited. But I definitely think that dominance for Bitcoin is going to be climbing, whether Bitcoin's price decides to go up or down. But I think we're due for that correction down to at least 25.28 on this orange line, which is a medium term outlook. I don't necessarily expect to happen this weekend or tomorrow. Could it? Absolutely, especially if we find out like just people are selling like crazy and there's not a lot of liquidity in the markets. That could happen, but I'm not necessarily too concerned with this until we start seeing some type of dramatic move in one way or the other. Otherwise, I think that 25.28 is going to be our next key level of support to be tested.
Let's look at Ford with
Forward.
the latest around, the strike intensifying, them losing, workers walking out of the plant that makes, like, I think the majority of their pickups, which is their best selling vehicle. And, it's a huge loss for them. What are we seeing there? It's down on the day. Nothing too terrible, 1.5%. But where do we see this going? And if these strikes continue, like, the union is not backing down, and good for them. Like, trying to, I'm pro union, get your money, take care of yourself. Like, these companies have shown. I don't understand people who are anti-union. Like, none of these fuckers give a shit about anyone but the bottom line. Like, we're seeing that, the Fed is getting vocal about the fact that they are pissed off, essentially, that more companies aren't passing some of these savings along to the consumers, and that consumers are just being price gouged left and right. So fuck these big corporations, cheering on the little guy here. But what are we seeing in the charts?
Yeah, I think Ford offered like 23% or something like that, and they were looking for 40, the union. So that's definitely a huge margin where they're just not on the same page. So that probably means that this strike's going to go on for a period of time. That's what I think it is. But when I look at this chart, I think that we're going to probably test this bottom level of resistance once again. I mean, it's kind of funny how many times we bounced off this like $10 to roughly where we are now, $11.80 range. I think that at some point this has got to give. Again, I mean, this is ridiculous, right? We're just coiling up at this point. These both. I mean, I could be an asshole and say this is this, and this could go on forever. But I do think that we are going to lose support at some point. This could just be another pennant, and if this is a pennant that like we're expecting, like a bear pennant of sorts, then it's probably just going to continue the way of the trend, which the trend was to the downside. So I mean, this could be one huge stupid move, ABC correction, right? 1, 2, 3, and then it could be something like this. I don't know how. It's really complex, but it's a stupid chart when we look at it on the macro. Point is, if we lose this, we got to look at levels of support that are gonna hopefully save our asses, right? So, say the market this breaks and the market starts dropping. Obviously, we're going to be below $10. I think at that point we're going to probably be, well, maybe not, maybe $10.50 to roughly $9.58. So let's say maybe this range right here. Let me get a rectangle. Let's do here. Somewhere in that range would be a pretty good idea of where this price could go. So roughly brings us down into, between 10 and 20% that we'd be dropping from here. Obviously, that's a pretty big move, right? But if we look at this on the monthly, you can see the monthly is going back into the oversold territory, but I don't necessarily think that if this continues and this is prolonged, I don't necessarily think this is going to be good for Ford at all. I think that we're probably going to be testing a lot lower than that rectangle that I just drew out there. This is just kind of a conservative estimate of where the price could go, but it's very possible we could end up in a place where we're dropping a significant amount. I mean, I'll just go back to 2008, and I use this as reference because, again, that's how fast the markets can collapse. I just want to get a gauge of how it was back in 2008. So 2008, actually, Ford was really cheap in 2008. Looks like it was already eating shit prior to that, probably with lot of what do you call repossessions and stuff like that that happened prior to 2008. But it dropped 90% from the high at that point. You want to say 90% from where that currently is right now. I mean, that puts you right around $2 to $3 a share, which I don't think is impossible, especially with given the strike going on right now. The longer this plays out, the worse it gets for Ford and a lot of these other automotive companies. I think that if more people continue, joining the strike too, this is just going to drag this price down to probably the worst case scenario, right? I mean, is it possible that Ford can go under? Maybe. Do they get bailed out once again? Possibly. But at some points, it has to give. But I definitely think this is going to be negative for price action, and we could easily see that $2 to $3 range tapped if this is a combined effort of strikes with also just markets get worse, oil continues to go up, crude oil goes up. You're going to see a lot of issues coming for GM and I forget the other one, Stel something. Was it
Stellantis.
Stellantis?
Yeah.
Never
Who
heard of them
in
before the strike.
Dude, with these rates, like who is out here buying new vehicles? Like I'm kind of freaked out because my lease on my truck is up in like March of next year. And I have the local dealership messaging me like, "Hey, do you want to trade your truck in early? We're looking to get more used vehicles because demand's high." I'm like, "Yeah, no shit. No one wants to buy a fucking new vehicle that's, 60, 70K and have these ridiculous interest rates on it." Like they've got to
And
be struggling here. And I'm sure when it comes to earnings time, they'll adjust their expectations and all that shit. But it is ugly. And it is, I'm not really sure what I'm going to do. I still got a few more months to figure that out. But god damn, it's not fun.
I'm not necessarily the biggest EV guy, but out of all the deals that I've seen for brand new vehicles, I think Tesla might be offering you the best deal for the Model 3. I think it's like
Yeah.
36K, but you get that 7.5K tax credit from the government. If you're buying in cash, it's not necessarily a bad deal, right? You got to have that money on hand. But yeah, it doesn't make sense to be buying used vehicles at all here, or new vehicles for that matter. It's only going to get worse too if this strike goes on.
All I need is natural gas to take off, and I can parlay the profits from that into a new Tesla.
Wouldn't be a bad idea. Maybe a Cybertruck. That's
See, that's what I was gonna say. I like having a pickup truck because I like being able to haul stuff, like my
yeah.
snowboard and all that good shit. And it's like I don't think I can go from a pickup down to like a Model 3 size wise. Like that'd be
It's
a tough transition. So like get that fucking Cybertruck out here. Get me the credit on that as well. Natural gas, go to $50 so I can buy a Cybertruck in cash and take care of it that way.
yeah. You know what is going to $50? Actually, I'm not going to say that. I'm not a financial advisor. Nothing I say is financial advice. But the
You're
UVix
gonna
is
say
having
ETH?
I was gonna say the UVix. Even I mean, ETH could go to $50 again. Seems
Hey
like
man,
people are
UVix
just.
isn't that far. Like UVix is up 21% on the day, dude. That is a big old green dildo on this chart right here. So
It was at
anything's
28
possible.
earlier.
Yeah,
I remember. I was looking at
it
it. I was like,
whipped
what?
up to like 40, almost $42 a share.
You know how many people were texting me this morning like, "Yo, what the fuck's going on over here?" And I'm like, it's just the UVix, guys. Volatility in the markets.
No big
Um,
deal.
no big deal. Just big green dildo. That's all. But yeah, this is the UVix. I mean, they had that reverse stock split, so obviously, the price is very different than when we were looking at the charts a few weeks ago. But we're above the 50 moving average on the daily. You can see great green candle, and it's completely, coming out of the oversold here. So we're probably in the mid range. There's room for more, obviously, but I'd never underestimate the fact that this market could pull back real quick. And again, this is the volatility index. All you need to see these gains reversed is for the S&P to be going up in value, and then it's just like, oh well, damn, we were at 28%, now we're down 5%. So it's going to be very volatile for the UVix. Again, this is one where it's like whenever there's a pullback and it's a good pullback to the point where I feel comfortable, I'll add to the position. But for right now, I'm not trading this. I didn't take any profits. I'm waiting for the VIX to go somewhere north of 60. I think that's possible. I don't know if it's going to go to 150 or 180 like some JP Morgan traders are thinking it will, but I want to be there for the ride, and that's where I'm parked, sizably, not everything obviously, but good amounts to have some exposure to volatility if we are right that this market is ready to go down.
Oh, it's going down. All right. Yeah, it's weird, man, because like there's really I want to be able to like have more like actionable things for people, but I'm not gonna recommend stuff just purely to do something, because right now it's all about patience. Like we just need to stay steady here. And the most boring things at this point, which are like bonds and high yield savings accounts, are like the best bet. Like, you could try to do some shorting here and there. I know that you're doing it with the banks, and I think it's a good play. But right now, like, betting on volatility the way that you're doing it, I think is smart. But like, there's really not a whole lot else to try to, like, trying to force it. Like, I see these Twitter spaces going all day, like people like live trading the market, which I question how many of these people are legitimately trading the market, or if they're just talking out of their ass. Like, show
Yes.
me the P&L, motherfucker, because I don't believe you for a goddamn second that
Hey,
you're trading more than $50 in this market.
Larry Halpern said, never show your P&Ls because then you're a target. People will want to rob you. So that's coming from the queen of, X
Whatever.
trading. But yeah, no, it's full of shit. But yeah, this is a really shitty market to be trying to actively day trade, I think. That's why I'm personally not doing it. I'm just building positions, right? Every time the market hands me a handful of shit, I'm going to take that and turn that into a diamond. So the Jamie diamond. But no, I'm just taking this advantage to buy. It's such a bad joke. I'm gonna just
Sure was, buddy.
keep buying puts, and then hopefully things work out in that regard. But I think that's people are underestimating. They see one green day and they're like, oh, this is good news. Let me sell these contracts, and the contracts values go down. And it's like, well, I'm gonna just swoop those up. I mean, I'm looking at PNC. Like, I bought $400 of worth of contracts of PNC right before the show. If PNC goes under, it's like 50K or something like that. I think that's what the contracts are worth. But it's just like those technically highly improbable events that would happen, but they require very little capital to be put into them, I think are very lucrative right now. And I just kind of like that exposure because, well, if volatility does increase, people are going to start panicking in. So maybe the banks don't collapse completely, but you're definitely going to get people who think they do too late, to the point where it's like, okay, they'll start buying those contracts at a pretty good premium, and then you can still flip, a pretty good, profit off of that. So I'm technically just saying that every time the market does something that you don't believe is part of your thesis, maybe add to the position. That's what I believe. But I'm not necessarily going to be, in the trenches day trading this, because the markets will fuck you in both ways right now. This is a very, very dangerous place to be. I mean, look at Netflix right now. People thought that, it was oversold. Nah, it dropped another $20 in terms in per share. I mean, it's bleeding like crazy, right? And we talked about, once some of these big tech companies start going, you're going to start realizing, oh, there's a lot of liquidity leaving the system.
Yep. I think that is a good place to leave it. I'm currently looking at some of the data coming out next week. Just kind of give the heads up there. We'll get some retail sales on Tuesday. That will be important to kind of see the health of the consumer. A little more jobless data next week. It is a big earnings week, but also big for Fed presidents speaking. A lot on deck there. We'll get the beige book. A lot of Fed speak. There's going to be focus from them, I'm sure, on everything going on with energy and how that's going to impact inflation, and therefore their movement from there. Go ahead, Kev.
Don't forget that options expire October 19th, no, 18th, 19th, and 20th. So there's a lot of options expiring in that time period. So you could see the markets be stupid till then. That's just one thing you got to keep in mind, because if the markets do really want to drop or move in any significant way, it's probably going to be afterwards so that they can build those positions. So just one thing to keep in mind if you see, the VIX get pulling back, or some of these indices start pulling up a little bit. You got 4 or 5 days next week where it could just be stupid.
Yeah, it's going to be a weird end to the month because we'll get, the first
October?
reading of October. Q3 GDP will come out. We'll get PCE. And just around the corner, we got, we're 1 month away from another potential government shutdown. So, like, the fun never ends.
And we don't have a House Speaker yet.
Yeah, October is off to a shaky start at best, but we are going to see how it all plays out. We're going to be here with you to get you through all of it. Whether we need to celebrate or commiserate, we will be here. So thank you, everybody, for watching. If you have not yet, hit the like button, subscribe to the channel, drop a comment, share us out on social media. All that good stuff is appreciated. We'll be back on Monday. Have a safe weekend in the markets. Enjoy yourself this weekend. Get away from the computer for a bit, and we'll see you on Monday.
Take care, everyone.